Hello and welcome to FlightGlobal Focus, a new podcast from FlightGlobal offering insight and analysis into the world of aviation. We'll be publishing episodes twice weekly, so join us every Friday for a review of the week's news, and again on Monday for a deep dive into topics from the worlds of aerospace, defense, and airlines. I'm Alfred Chua, Asia Airlines editor at FlightGlobal, and today we'll be continuing our deep dive podcast, looking at some of the airlines that have caught our eye this year. Now we'll be looking at their challenges, their opportunities, and what they tell us about the wider airline market. And joining me this week is my colleague and Airline Business editor, Lewis Harper. Hi, Lewis.
Hi, Alfred. Good to be here.
Now, if you've been following this series, you will know that we spoke about United Airlines in our last deep dive. This week, we will travel across the Atlantic to look at British Airways and Iberia holding company, IAG. Now, like United, IAG was a winner at the recent Airline Strategy Awards, which were held in London in mid-July. At the awards, we recognized Chief Executive Luis Gallego. Now, judges were impressed by Gallego's leadership of the group coming out of the COVID-19 crisis. Now, one judge said, quote, "They've done something that's very hard to do. They're massively outperforming the other big airline groups in the region," end quote. And another judge said, for the first time, the group is humming because every part of it is doing well. To give us a picture of IAG and its strategy, I'm going to be bringing on my colleague Lewis, who has been following the ins and outs of the group closely. Now, Lewis, could you talk us through about IAG, its history, and also the scale of the group structure?
Yeah, so IAG was founded in 2011 with the merger of British Airways and Iberia. Notably, at that moment, British Airways was led by Willie Walsh, who's now IATA Director General. Willie Walsh brought those two brands together under IAG as the holding company. And basically, throughout IAG's history, it's been pitched as a vehicle for consolidation in Europe. So at that point, 2011, it's got hubs in London and Madrid. Walsh left, obviously, around the time COVID hit and was replaced by Gallego, who you mentioned, who was leading Iberia at the time. Very different leadership style, certainly in the way they communicate externally. Of course, Walsh, very outgoing. I say Gallego's a bit more of an understated leader, but very effective, as we will come to talk about. So being 2011, it means IAG was formed in the kind of post-financial crisis period where consolidation was a big theme. And not just in Europe, carriers around the world, North America in particular, were clearly realizing that consolidation was going to be really important going forward. Both carriers at that point, BA and Iberia, big on connecting to the Americas, where they had the US majors as pretty formidable competitors as well. So economies of scale really important at that point. So when we talk about consolidation, obviously that's one of the big advantages you get there. But as we go through that decade, we had those two airlines and they continue to be the biggest members of the group. BA by far the largest, but Iberia behind it. But its first purchase was BMI from Lufthansa Group, but essentially that was for slots. It's not a brand that IAG maintained. But the first sort of significant acquisition in terms of brand was 2013 with Vueling. So that's a Spanish low-cost carrier. So at that moment, it became a kind of a true group in terms of encompassing the kind of traditional network carrier function, and Vueling gave it that low-cost carrier function as well. 2015, Aer Lingus joins. Fair to say, maybe a bit of a hybrid carrier. So it's noteworthy that Ryanair was also in the market for Aer Lingus at one point. So, but that gave again IAG Dublin hub, and obviously important for connections to the Americas. In 2017, it launched Level. We'll talk about that a bit more. It continues to exist to this day, but maybe not at the scale that was intended or envisaged at that point based on market dynamics. It also owns Avios, a pretty well-known frequent flyer program, and its two biggest brands, BA and Iberia, are members of Oneworld. In terms of that consolidation, it was relatively close to acquiring Norwegian a few years before COVID-19, and in the past couple of years has failed in an attempt to acquire Air Europa from Globalia. obviously that story's been in the news a bit recently with Turkish Airlines as an investor in Air Europa. It's also in the running for TAP, Air Portugal, alongside Air France, KLM, Lufthansa Group, and potentially others. IAG Cargo is all belly hold, so it doesn't have dedicated freighters. And today it's got around 600 aircraft. Orders in place, so its first 737 MAX jets are on the way. That will mark a change from an Airbus-dominated narrow-body fleet. Obviously, BA retired its iconic 747s going into COVID-19. And the group today has dozens and dozens of 787s and A350s for its wide-body services and does retain BA's A380s as well. And just to put IAG in sort of a global context, it ranked 5th globally for passenger traffic in 2024 in the latest Airline Business ranking. So that put it behind the 3 US network majors and China Southern, but also it was ahead of its European peers by that measure. In revenue terms, it ranked 7th globally. It was behind Lufthansa Group by that measure, but at just ahead of Air France KLM. It's probably worth noting its profitability was way ahead of those two competitors. So that's giving you an idea really of where it fits into the kind of global market.
Yes, and it seems that talking about it, but the scale of operations is quite huge. When you talked about profitability, how has IAG been performing, especially so coming out of COVID?
Yeah, and this is when you mentioned the Airline Strategy Awards. This is where it really stands out compared with its peers. So certainly on the margin side of things, we know that the airline business is notorious for its tight margins, but IAG has kind of been bucking that trend. So it has impressive profits, and I think it's noteworthy that they have been generating profits in all of the airline units in recent quarters and years. So for the full year of 2024, IAG had an operating profit of 4.4 billion euros, around 5.2 billion US dollars. Operating margin of 13.8%. As I said, that's way ahead of industry averages and its peers. Net profit of 2.7 billion euros. I think observers will say that's been driven by really disciplined cost management and strong demands in the COVID recovery. The performance of its subsidiaries are really important in this. BA's operating margin was 14.2% for the full year, and Iberia contributed 1 billion euros to that profit. So really strong performances all round. I think there's a sense that Gallego has taken the group up a notch through investing in operational reliability. So punctuality's really improved at Iberia and BA in particular, and aiming to enhance customer satisfaction and brand loyalty. And strategically, Gallego has also expanded IAG's global footprint by strengthening those core hubs and partnerships. And that was something that the judges in the Strategy Awards were particularly impressed with. Those partnerships include deeper integration with Qatar Airways, which is an investor in IAG. It's expanded its joint ventures with American Airlines and Japan Airlines, for example. And, as with any partnership move for an airline or an airline group, this is all about extending reach without extensive capital outlay, and IAG does that pretty well. I think, as with anything in a business in the airline industry, there's an element of luck, maybe a strong word, but fortunately for IAG, it was nowhere near as exposed to Asia Pacific as its peers in Lufthansa Group and Air France KLM. So, whereas its competitors have had to handle the fact they either fly 3 or 4 hours longer around Russian airspace in this post-COVID period to serve Asia with all the costs and inconveniences that brings. IAG was never massively exposed to that market. On the other side of the equation, it is obviously much more exposed to North Atlantic. That market, as we know, really powered out of COVID-19, particularly the big joint ventures there. Iberia also gives it big exposure to Latin America, and is noteworthy that lots of European carriers want a piece of that action at the moment. And you mentioned that's why Air Europa is kind of in demand. And all this sort of adds up to create a business that I read what analysts say about the European aviation sector. And I think alongside Ryanair, kind of IAG is viewed as a sort of a rare example of an airline group that presents quite a compelling investment case, certainly at the moment. So a really strong emergence from the COVID-19 crisis.
Right. It's interesting that you talked about how the sort of the pieces of the network sort of fall in very nicely. reduced exposure to Asia Pacific, greater exposure to the North Atlantic market. Could you also talk a little bit about, what the strengths of IAG's group structure is compared, say, maybe to European competitors?
There's a couple of important points there, I think. IAG's kind of sets the standards on having a pretty lean central operation and allowing its individual brands to flourish in their own markets. That's not to say that's not the ambition of other groups, but I think IAG was very much set up with that as the aim from day one. And it obviously, in doing that, it's leveraging that strong local recognition it has in its brands, the obvious ones being BA, Iberia, and Aer Lingus in their markets. And I think it is noteworthy in that context that when you look at its big competitors, so Lufthansa Group, Air France, KLM, so they're kind of both named after their flagship carriers. And I think optically, when you think of those groups, you think, well, Lufthansa Group is kind of run by the German operation. Air France, KLM is pretty much everything's done from Paris. As I say, they're named after the flagship carriers, where I think they intentionally kept IAG as that neutral kind of holding company where it lets the brands do the talking. So you never get the sense that there's that, as much as BA does generate most of IAG's revenues, you never get the sense that it's one dominant brand leading the other bits of the business. And I think that's also reflected in the way it operates day to day. And I think beyond that as well, you look at some of the political pressures that Air France, KLM, with government involvement in ownership and things like that, have had to deal with. And IAG has kind of largely avoided that. And a key part of its group structure is that with the liberalised aviation market in Europe, and it runs internal competitions for capital and for resources within the business. So, fleet being the really obvious example, where with the XLRs coming in, it wasn't clear which part of IAG would get them. Aer Lingus was told to get its house in order if it wanted to have them. It needed to get some labour agreements in place, for example. So Iberia was actually ended up being the first operator of those XLRs. And it really does push the idea that individual airline CEOs have to pitch for that investment and resources. And in doing that, it spreads the risk as well. So as I said, it has the ability to shift capacity, focus based on market dynamics. And because it has that low cost carrier as well, that even means, resources between network carrier and low cost carrier. And with its hubs as well, it can move between resources between them. It's big on digital investments as well. I'd expect every airline group would say that, but it is noteworthy. It invests quite a lot in startup businesses and things for innovation in that regard. And there are big projects under the way at several of the airlines in the group. So, the headline there is that the structure that lets individual brands flourish and keeps the kind of central organization to a lean operation that does what it needs to do, but not more.
Letting each of the individual kind of brands flourish. And given that IAG has so many different brands, what are some of the strengths of each of the units in IAG, the brands?
Yeah, so I mentioned BA. So obviously the biggest revenue generator in the group, sometimes the biggest profit generator, although Iberia is definitely giving it a run for its money in that regard at the moment. The obvious thing about BA is its position at Heathrow, which is Europe's busiest hub airport. That strength, obviously, and the use of that hub is driven largely by the lucrative transatlantic market, where BA is obviously in the One World-based joint venture there, notably including obviously American Airlines. So that gives it kind of a starting point for BA as a pretty strong position, a very defendable position. We know that Heathrow is very slot constrained. That may change in a decade's time. Who knows, with a new airport on the way. But certainly at the moment, they have some of the most valuable slots in the world there. BA has been investing in its onboard product and technology, which it hopes will drive some underlying revenue improvements. It is a business that, if you read the UK media, a lot of people, you'd get the impression it's lost its way in recent years. I think there's some fairness in that, but in other ways, I think it gets a level of scrutiny maybe that other airlines don't receive. And I'm not sure most of its problems are unique to BA. What it's managed to do coming out of COVID as well is replace lost premium revenue that was coming from business travel with leisure premium revenue. Obviously, as a network carrier that's big on the transatlantic market, it's that premium revenue that really drives profits. BA in particular, I think business travel hasn't recovered to pre-COVID levels yet, but any concern that would be a big factor in the post-COVID period, I think, has been proven wrong, because they are, as I say, leisure travel has kind of stepped in and filled that void in a market where there are still obviously big capacity constraints. So BA as well, yeah, very strong brand in the UK. I think it's one of those brands everyone would have heard of. And Iberia and Madrid. So what's really interesting about Madrid at the moment is its kind of reputation as the new Miami. So essentially what it is viewed as a safe place for wealthy people to invest from Latin America. Obviously, historically, that's been Miami, but increasingly Madrid is viewed that way, with a relatively stable economy, helping give investors confidence to have property, move to travel to Madrid. So when you hear about the interest in Air Europa, which is another Madrid-based airline that connects with Latin America, there's a reason why so many carriers in Europe want a piece of that action, and it is because Madrid is right in the middle of the action in terms of growth markets in Europe. So Iberia, they're really strongly placed in a market that's highly attractive at the moment. Vueling, interesting one. Vueling, obviously, it's a Spanish low-cost carrier, but it's essentially, again, and this, I guess, reflects the IAG philosophy, fairly neutral brand. And Barcelona remains its biggest hub, and it's big on domestic Spain, but it is growing outside of Spain. And this is where the kind of IAG internal market comes into play as well. So Paris-Orly is a big operation, and notably London Gatwick, it bases some aircraft there. And again, that comes from IAG looking at what resources they had coming in and which would best suit that market. So Vueling, it is a pan-European carrier, I suppose, not quite in the sense of Ryanair or something like Wizz at the moment, but it has bases elsewhere, and the idea is it can shift around in Europe's liberalised market. Aer Lingus, a bit of a hybrid model, as I said before. It's, again, a really strong brand in Ireland. It's had some labour challenges recently, which I think it's overcome. The really strong thing with Aer Lingus is the US pre-clearance it has at Dublin and Shannon airports, which makes it an attractive place to do the transatlantic routes from. And again, IAG has opened an Aer Lingus base in Manchester in the last few years, again reflecting that internal competition. So again, another strong brand in its market, where it's also moving into other markets away from that core customer base. I mentioned Level, interesting story. Obviously, it launched in 2017 amid the rise in low-cost long-haul travel, and at that time Norwegian had big plans. It was investing in wide-body aircraft. It was providing competition to IAG and the other big European carriers, Air France-KLM in particular at Paris, with its low-cost product on the transatlantic and elsewhere. So while I mentioned that IAG was clearly interested in potentially purchasing Norwegian at one point, it wanted to face off that challenge. In doing that, obviously, it doesn't want to cheapen its core kind of premium brand. So it launched a low-cost long-haul carrier with the name Level. I remember the launch quite well because the executives were wearing some quite questionable branded clothing, polo shirts and things, which I'm sure are buried at the bottom of their drawers today. And I would also say, though, it was nowhere near as cringe-inducing as Air France-KLM's June, which it's probably giving people nightmares that I'm mentioning that again, and we should probably do an entire podcast episode on that one. But what's obviously happened since is the low-cost long-haul model is still, at best, it's questionable in terms of its sustainability. So Level has sort of retrenched into a largely Spain-based operation, but it continues to be a brand and something that, again, within the internal market, the IAG could flex up and down as required.
So going back to, IAG as a group, could you talk about what are some of its challenges and its opportunities?
Yeah, I touched on a couple. So we talked about slow business recovery for BA. BA, obviously, while it has its joint venture across the transatlantic, it does face really tough competition on that market. It's also got Virgin Atlantic as a significant competitor at Heathrow on the long haul. Obviously, Virgin's starting point is always slightly disadvantaged because it doesn't have the feed that from the narrow body fleet that the BA has, but nonetheless, Virgin is a not insignificant challenge at Heathrow. And within that sort of competitive environment as well, BA or IAG as part of Airlines for Europe, the kind of lobbying group for European airlines, will often cite the regulatory environment in Europe as being unhelpful and putting it at a competitive disadvantage. So we know the European Union, with its emissions trading system, taxes, etc., in theory, puts a burden on European airlines, or certainly will do in the future, that might, if you look to the US under the Trump administration, I don't get the feeling they're going to be introducing any onerous sustainability-based taxes on airlines anytime soon. So that is a concern, I would say, countering that European airlines in our top 100 ranking were the most profitable in 2024. So it's not the most convenient narrative for that argument, but there we go. I mean, and obviously BA's exposure to transatlantic. We know earlier this year there were a lot of concern that with the trade war kicked off by Trump, that we might see some damage to the economic confidence and relationships between countries, and that if you're highly exposed to serving the US from Europe, that could have consequences. So far, nothing too bad other than some softness in the main cabin there, but again, something to watch out for. We know that the UK government is big on growth, or at least talking about growth. And one of the ways it's aiming to do that is to increase airport capacity in the UK. So opening up the reserve runway at Gatwick to regular flying every day. A new runway at Heathrow again. I mean, no one's banking on that, but it is in process again. And that obviously is potentially positive for BA as an expansion opportunity, but it does mean that it's quite clearly part of the expansion there will be a requirement for Heathrow to allow more competition into those, and Gatwick as well, into those markets. So yeah, it does. Enlarged airports means more competition in theory. So that's something to watch out for with BA. And obviously, as things stand, slot constraints generally mean that it doesn't actually have many options to expand when it wants to. So yeah, not unique to a network carrier like BA, but yeah, that is a dynamic at the moment. Obviously, as I mentioned before as well, if Turkish Airlines invests in Air Europa, there's some interesting competition dynamics building in Madrid, although IAG does also retain its 20% stake in Air Europa at the moment. And with TAP being up for sale, a big group, potentially Air France-KLM, Lufthansa Group, could be rivaling IAG on the Iberian Peninsula if they were to be successful in purchasing TAP. So something to watch out for there in competitive terms. I think challenges in the low-cost market, they have to be very tactical with how they use Vueling. They're not going to achieve the low unit costs of a Ryanair or Wizz, for example. They might try to, but it's incredibly hard without the scale of Ryanair, for example. So tactical use of that and the constant competitive environment faced there should not be underestimated. I would say in that context that an opportunity is potentially more consolidation in that segment. So a question I'm putting out there entirely without any knowledge of the situation is, would IAG buy EasyJet, for example, or more importantly, would it be allowed to, but by European regulators? But these kind of questions are coming along. Michael O'Leary of Ryanair is very fond of talking about a future where there are only really 4 or 5 big airline groups in Europe, and at the moment there are more than that. So there's consolidation potentially bringing opportunities and challenges again in that in the low cost environment. Opportunities, as I mentioned, new aircraft coming in, the XLRs for Iberia and for Aer Lingus, opening new routes, allowing thinner routes across the Atlantic, for example, giving it some flexibility there. Opportunities to expand into Latin America and the transatlantic, through stronger partnerships, etc. They're always there. It does, when metal starts coming available again, could it do more in Asia Pacific because it's so underexposed to that market at the moment? If we ever do reach the point where Russian airspace is open to European carriers again, then it is positioned from a fairly small starting point to do something more there. Dublin, again, has opportunities with that pre-clearance in particular. So it's got lots of options, and it continues to overhaul its digital offering, as I mentioned before, which it does say will drive more revenue. Its Avios scheme is popular. Finnair recently adopted it as a fellow One World member. And broadly, when we look at opportunities in Europe, we know that airline growth tends to match GDP. In broad terms, Europe is sluggish in that regard compared to some regions of the world, but it is growing. But that also on the other side means that sluggish growth, fairly low percentage figures, does mean it's vulnerable to recession and slowdown. So it's in a good place, and there are plenty of opportunities and challenges as ever, but I don't think there's anything particularly unusual at the moment in that regard.
So what else are you looking out for the rest of this year?
I'd say for the rest of the year, the really key thing is what they say about the third quarter. We know for European airlines that the July to September period is where most of them will make most of their profits. A lot of them will be loss-making in the winter, where it's worth mentioning that IAG made quite a rare profit, I think, during the January to March period. So, what we really want to see, and I mentioned the potential softness on transatlantic, it's going to be really interesting to see in, I think, a month or so's time when IAG comes to report on that period, what they have to say, if they're continuing to be pretty confident about how things are going in that regard. So I think that's the biggest thing. I think broadly, a lot of European airlines are talking about shorter booking windows, which is making it hard to see very far ahead. So far this year, the shorter booking windows haven't meant that generally people are booking less. It's just they are booking later. And I think that partly reflects some of the economic challenges perhaps in Europe. We had people's spending. We've still got relatively high inflation in some markets. People's spending power is affected as a result. And that remains sort of an unknown that could tip into the wrong direction fairly easily at some point. So that, again, one to keep a close eye on. I guess BA will be relatively pleased that the UK government has again, relatively close relationship with the Trump administration and hasn't suffered some of the biggest kind of tariffs in that regard. So when you look at how BA might be feeling about transatlantic, that I guess gives it some hope. I think my broad observation on IAG, certainly across the rest of the year and generally, is that it's never that exciting. I think maybe it doesn't get the headlines, again, because I think it as a holding company, it's a pretty neutral name. It doesn't get some of the excitement around the politics and everything. But I mean, it's not exciting in a good way. I think it keeps moving along. It keeps recording some impressive results. It's in the right markets at the moment. It's got flexibility. So sort of it's in a leadership position that it's IAG's to lose, really. So one to keep an eye on, and it kind of is setting some standards for how you should do consolidation. And I think there's obviously more to come in Europe, whether it's SAS with Air France KLM, we've got ITA with Lufthansa Group, and they're integrating those businesses. And I'm sure some of them are, probably wouldn't say it out loud, are looking to how IAG do things as they consider their pathways there. So a worthy winner, Luis Gallego at the Strategy Awards, and an airline and a group will be keeping a close eye on going forward.
Great stuff. Thank you. That was Lewis Harper, Airline Business Editor with FlightGlobal. Nice. If you want to learn more about IAG and the wider European market, have a look at the FlightGlobal and Airline Business websites. Now, you can join us again on Friday for a roundup of the week's aviation news from some other members of the FlightGlobal team, and again next Monday for another deep dive. FlightGlobal Focus is a production of FlightGlobal with audio production by Lucy Johnson. Now, if you have comments about today's episode or you'd like to be a sponsor of this podcast, please email podcast@flightglobal.com. That's podcast@flightglobal.com. Find future episodes wherever you get your podcasts, and don't forget to rate, review, and subscribe. This has been Alfred Chua. Thanks for listening, and we'll see you next time for FlightGlobal Focus.